We all have heard so much about saving money for the future. Do you actually think that saving money can solve all of your problems? Well, most of the people do. But what if the value of the currency goes down in the future? If we see the reality today, the interest rate is very low. Saving accounts are paying almost zero and inflation is climbing at a much faster rate. The future of saving money is starting to lose its appeal, and according to the New York Times, it's a terrible time for savers. The reality is that 40% of the circulating currency was made during the last 12 months, and investors have shifted more money into the stock market during the last 5 months, and this was more than the prior 12 years combined. What's up guys, welcome back to Glory Investing Show. In this video, I'm going to explain why I stopped saving money. You will be shocked to hear that the value of a dollar is going to be zero in the future, and the actual concept has been running around for a long period. Warren Buffett's lifelong business Charlie Munger just recently said in an interview with Yahoo Finance that the safe supposition for an investor is that over the next 100 years, the currency is going to be zero. You may be questioning how is that possible. The value of the dollar will always be equal to a dollar. If you look at the hundreds of years back data, you can get the idea that the value of the dollar has dropped in the last couple of hundred years, particularly in the year 1913, when the USA created the Federal Reserve and central banking system. The fortune of all fiat currency will eventually go to zero if you have remembered that some of the other countries' currencies has fallen terribly, for instance the currency of Zimbabwe. The main reason behind the failure of the Zimbabwe dollar is hyperinflation. Hyperinflation is actually very high and typically hastening inflation. It rapidly corrodes the real value of the currency. This situation provokes the people of the country suffering from hyperinflation to switch to other currencies which are more stable. In Zimbabwe, hyperinflation started in 1990 and went to its peak after 18 years in 2008. You would not believe that their country's inflation rate was around 80 billion%. So if you just go up to the store to buy a wristwatch, you'll be shocked to see that every minute the price of the watch changes and just go to double, triple and quadruple. So what may be the reason behind the hyperinflation in Zimbabwe? The answer is debt. Their imports and exports started to decline every day. And as a result, their GDP also dropped and they became unable to pay their debt. To meet the needs, they started to print more paper money, and there was no guarantee of gold to back that currency. This means that every printed paper money was useless. If you know about history, the currency of Germany in 1922 also went down when the country was forced to compensate for all the damage that were the result of World War I. So the country hired people to rebuild but had nothing to pay. To meet those needs, they also printed more paper money. There was a Venezuelan boulevard in 2016 that hit the inflation rate up to 800%, and in the next 2 years this crossed 8,000%. They had very low supplies, and to meet the needs, they also printed more paper money without having no gold as a backup or guarantee. There are many other countries such as Hungary in 1946, Peru in 1991, Russia in 2014, Argentina in 1992, and Belarus in 2002, and they all suffered hyperinflation. In simple words, this situation is very common, and a number of countries have gone through it. It is actually a circle. Whenever a country faces low supplies, it only sees one way to get out, which is to print more paper money, and the printing of paper money also brings hyperinflation with it. As a result, all money becomes worthless. During the year 1913, the USA allowed the creation of the Federal Reserve, which was actually privately owned, created in secret on Jekyll Island between the 6 most powerful banks in the world, and the country gave the power to regulate the supply of the currency. That was the time when any individual could demand $35 for 35 ounces of gold. The basic idea was that banks would be able to lend what they had in their hand because they could not print more gold. But without a product like gold supporting the dollar, this gave banks more power to get rid of as many loans as they wanted. In 1971, President Richard Nixon took us off at the gold standard, and the value of the dollar started to drop more and more, particularly since 1913 when the USA created the Federal Reserve. The dollar actually lost 96% of its actual value. To simply understand this concept, today the $1 amount gives you the same value of the product that 4 pennies did in 1913. So this means that the failure of the dollar is not going to happen in the coming years. Rather, it means that this situation has already occurred and will continue its journey as long as it exists in this way. According to the research of 700 currencies of the world, the strongest currency has a life expectancy of around 100 years. The strongest currencies in today's world are the pound and dollar. So what about the life of normal currencies of the world? Their average life expectancy of normal currency is around 30 years.
Democracy, getting the idea that you can just print money to solve all problems? with actually the probability of those rising from that level.
Well, it is probably never gonna happen, but there are possibilities. America has never defaulted on its debt. If the interest rates get so high that we default on our debt and we can't pay it back, this would mean that every single one of us, including the companies and foreign investors, would be in much pain. Actually, foreign investors want the stability of the economy in the country. If they are in trouble, they will pull all their investments out and the US will lose its status as a world reserve currency. Well, this is an imaginary situation as the US has the capability to print more dollars. No doubt, other countries have their own money printers, but they have the problem that their excess money will not be absorbed by the whole world as the US dollar. This does not mean that the world is asking for dollars. Actually, there is a reason behind the demand for the dollar, which is energy. Energy actually means oil, and all the countries of the world can buy oil with dollars. That increases the worth of the dollar. Therefore, there are more chances that the world would definitely absorb the excess amount of US dollars. In simple words, you can say that now the US dollar is backed by oil. During the year 1971, when the US got off the gold standard, the US gained the confidence and trust of the oil-producing countries like Saudi Arabia that the US would protect their country and will also help in increasing business activity, but in return, the US need is that the whole world will be able to buy oil with US dollars. Now, as long as there is an association between the oil that the whole world needs and the dollar, the US can print more dollars due to the reason that the country is so far free from the hyperinflation concept. The world can absorb more dollars as long as they can get the products that can only be bought with dollars. Now, what if the other countries stop using the dollar due to cryptocurrencies or they stop using oil? Then hyperinflation will come in and the situation will get worse. There is a chance that you can protect yourself against inflation by investing in debt. Now, how is that possible? Let me give you an example. If you borrow the money with the low interest rate of 3% and after that the country increases the rate of interest up to, let's say, 7% to fight against inflation, then you can make 4% on your loan. And if you invest that money into real estate, then you can make more paper money without paying taxes because you have already taken debt. You should understand the concept that inflation takes the money from the savers and bless the borrowers, and the most qualified borrowers have always been our rich people. In case you're thinking about investing your hard-earned money, click on the link below and download Moomoo app and get up to 5 free stocks worth up to $7,000.
Short counts, they lose fill slips, they'd even take cash right out of the drop boxes.
Well, that would be all for today's video. I hope that you enjoyed it, and if you found this video helpful, make sure to smash that like button and share it with your friends. And while you're here, click to watch one of these two videos appearing on your screen. I'll see you there. Take care and stay tuned.